We're just getting in earnings from both Alphabet and Intel. Let's break them down with Geoff Barratt. He's the general partner with Barratt Capital Holdings. Geoff, a quick read here from some of the top numbers. First quarter EPS, earnings per share for Alphabet, parent company of Google, is $2.81. The estimate had been $2.01, so a big beat there. And first quarter revenue at $90.23 billion, beating the $89.1 billion that had been the estimate. What's your first takeaway on this?
Yeah, look, my first takeaway is they did really well on earnings. This is a stock that trades a lower than market multiple, and I think we can all say that this is a pretty fabulous company. So it's priced well, and a franchise that I think is fairly impregnable. That said, I think what's troubling people with the Mag 7 is, one, you've had fantastic performance out of them for the last couple of years. But more importantly, they've been spending a lot of CapEx using government fiscal stimulus, and that's been driving revenue growth. And so the question is, if we start to see fiscal reductions in spending, does that affect Google's revenue growth? And I think we're kind of seeing that a little bit because we came in at sub 10%. That's not what they had historically been doing. Cloud revenue in particular seems a little light. And so that seems to be a direct recipient of fiscal spending. I haven't seen the CapEx numbers. They had been typically spending, in line of 15% of sales, which is an incredible number. And so I think what the market is wondering is if there's a shoe to drop in this AI CapEx spend, does that affect Mag 7? And that affects a whole lot of things like power. It affects data center companies. And so that's the real question on Google. And then beyond that, with Google, you have a long-term view of whether the government splits this up. I personally think the stock's worth a lot more split up, but that uncertainty affects people. And I'd say, look, the other is obviously OpenAI and ChatGPT. Google has its own product, Genesis, and the question is, can you have a period here where advertising revenue stays elevated, Genesis transitions out of Google, or does OpenAI take that revenue? And we really haven't seen a lot of advertising revenue at some of these AI companies, so it's uncertain. And the market, in the face of uncertainty, will bid things lower and put a lower multiple on capitalization.
Okay, we've got a lot packed into this. I'm going to pick it apart a little bit. The first part being that we do see some companies revising how much they're going to spend for their AI output because of what happened with China coming out and saying it's not really going to take all that much. You could do it cheaper. Yeah. So do you see a need for Google to do that, or do you think that they should be spending the money that they plan to spend?
Yeah, so I think they should spend that money as long as their ROE on that money or potential ROE is strong. And okay. I think with the incentives that the Biden administration put in place with 3 fiscal spending bills, there was enough government investment tax credits returned to make that good. It's unclear, and we won't know until May, what Congress is going to do to those bills and spending. So that's a real uncertainty. But I think, look, any business wants to expand its moat. And it's not clear that Google has a moat with AI technologies. And so it's really possible that a ChatGPT could usurp Google's search business, which is the core of their business.
And that's been talked about for a while, but we haven't seen it happening maybe as quickly as many thought it would. Why?
Look, I think AI is developing, and there's still lots of
weaknesses?
Yeah, well, and there's a big road to develop that to make it user-friendly for consumers. And I think right now, all we have is text. We haven't even seen what they can do with images yet. That's developing in Silicon Valley as we speak. And then beyond that, you have to layer in advertising revenue, and will advertisers pay for that? Mm-hmm. And how will they get compensated? And I think with Google, they have a great model. It's very productive. It's down in the funnel in that it's the last advertising that a business would probably cut because it's so productive. And so AI needs to show that it can be productive and generate that advertising revenue for it to usurp Google. And we're just too early to know yet. But in a world where we've seen things, the typewriter get taken out by the computers and the BlackBerry getting taken out by the iPhone, this seems risky that could happen here. And so whether Google can defend that by spending CapEx, and it generates an enormous amount of cash, and has an enormous amount of cash on its balance sheet is a real uncertain point, and that's why the market puts a lower multiple on it.
Okay, clearly investors are liking the news so far. The stock's up after hours 4.7%. I do want to get to Intel.
Yeah.
Intel also reporting first quarter results. So revenue at $12.67 billion, down a little bit year over year. The estimate had been $12.31 billion. So they did beat. Earnings per share 13 cents versus 18 cents was year over year. A couple of things with this company, because there's so much going on. They've got a brand new CEO who was a board member, now is leading the company, and they are slashing staff.
Yeah.
So on the heels of that, which has just happened, what's your read on their first quarter results?
Yeah, look, you have to be a long-term believer in Intel. You're not going to get it just out of this quarter. You have a new CEO. The new CEO is going to clear the decks and make a lot of decisions now that would potentially blame the previous CEO and set him up for success. And with Intel, what they've done is they've not just cut staff, but they've also sold a piece of a major business and generated like $8 billion in cash to do that. They are negative cash flow producing. In my experience, when a company is not making cash flow, that equity will not perform. And so you need to get to this company to a period where it's not spending $25 billion a quarter in CapEx, and it's generating more than $8 billion in operating cash flow, and then the stock would work. So you have to take a longer term view on how the foundry business and the chip business can become profitable. And if you have that view and can wait, then the stock could work. But it's people try to defend it on a sum of the parts basis. If they cannot be profitable, the sum of the parts will never work. And so you have to hope that they can do that. And look, that requires a level of due diligence that you're not always going to get in the public markets. And so I think for now you stay away from Intel, but you continue to monitor it. And it could be like a GE situation where everybody hates it for years, and suddenly it starts to turn around. Or it could be a BlackBerry where it never turns around. And so that's the real decision factor here.
Okay, so at this point with where it is and the new leader, how much time would you give him? How much traction?
Yeah.
The last guy was in for about 4 years,
Yeah.
I believe, before they said thank you very much. So how much time do you give for that traction to, and is he going to completely revamp their forward-looking plan?
Yeah, look, a lot of uncertainty, has a good track record in the past. I think boards usually give people 2 to 3 years for their plan to come to fruition. I think that's not different here. So I think you wait. The board, he has a free pass for a year, and then people will start to hope for improvement. And if you don't get that, then maybe the knives come out on him. You know, it took GE and Boeing a few CEOs before they got it right. Boeing seems to have it right now. GE certainly got it right. And so maybe there's an iconic CEO that they can pull out after the current one that can actually do something. So it's there's nothing I've seen right now. They seem to be burning the furniture to save the business, selling pieces. There's nothing I've seen that means you buy this stock. It's dead money, you know, trade in a range for quite some time. Google could trade up a lot, and so we'll have to see how that plays out.
Intel down and after hours trading. We just had that number up. Geoff is going to stick around with us. We are still waiting for the results from Celestica, so we'll get to that in a moment, and our continued wrap up of the day's markets and a look at more headlines in just a moment. Stay tuned.